Can you reconcile this data this morning with the data we've had all week? First of all, your view on this morning's number, and second of all, to Mohammed's point, can you reconcile this with what we're looking at elsewhere?
Yeah, a couple of things. I mean, the big market reaction is not only because this is a strong report on its own, but it is stronger than what people were expecting going in. And there were two things that were kind of undermined relative to those expectations. Number one, as Mike was talking about, the seasonal flows expected to push down. We overwhelmed those. And then there was a pull forward argument around warm weather, and the construction number that Mike just mentioned was very strong. So you didn't see either of those things. Mohammed mentioned closing the door on July, opening the door or reopening the door a little bit wider on the debate about whether or not policy is indeed as restrictive as the Fed thinks it is. And this is a little more evidence to bring that debate back into the fore, that you have the big financial conditions easing that's offsetting the tightening. And we may not be as tight as we think we are. Well, I think there's a little bit of a segmentation going on in terms of where is interest rate policy biting. And it is in the lower end of the consumer side. The flip side of that is the wealth effect, right? This is a Fed that has basically said, if inflation is stronger, if growth is stronger, we'll just wait. They've given us a very asymmetric outlook with regards to their reaction to their data dependence. What that has done is basically given the green light for financial market conditions to be very easy, and the transmission of that into the economy is a very strong wealth effect for the predominant sources of where most of consumption comes from. So you do see the weakening that Mohammed's talking about, but the weighting of that weakening, I think, is less. And so, yes, growth is slowing, but it's slowing to a level that is still well above trend. And so you don't get as much of the constraint and the push down on inflation. The Fed is basically saying, we're okay with that. And I think that's why you're pushing back with this data today on this notion of we're really restrictive. I'm not sure they're as restrictive as they think they are. And the policy of asymmetry to data reaction is kind of pushing against that by pushing up or easing financial conditions.